Welcome back to another episode of the Around the Block podcast by Coinbase. I'm Justin Mart.
And I'm Catherine Wu.
Catherine, what are we getting into this week?
So this week we're talking about developer activity within the crypto ecosystem. And so what we're basing this on is Electric Capital, which is an early stage venture capital firm that invests in the crypto ecosystem. So every year they put out a developer report based on the activity that they gather from all the open source code depositories across different crypto ecosystems. And today to talk about the report is Maria Shen, who's a partner on the investment team at Electric Capital. So Maria is I actually met Maria a couple years ago, and I remember being so impressed by her resume because before Electric, she was a co-founder and the CTO actually of an e-commerce startup. And she's also worked at Microsoft. She's a Harvard grad. So I remember just being so wowed by her the first time I met her, and I think it makes her the perfect person to lead the research efforts and also to break down the report with us today.
Agreed. Personally, I'm thankful that she's even doing this, because somebody's got to pierce through all this open source data and tell us what's going on, right? And who better than Maria, who better than Electric Capital, a firm that has a bunch of previous software developers. They know the space inside out. And boy, is there a lot of interesting things to dive into. So let's get to it.
Awesome. Since you started releasing these developer reports, 3, maybe 4 years ago? Just how extensive you go with the research, and it seems like there's a huge community behind it. So first of all, kudos. It's amazing to see how far it's come and how big the project's grown. And two, I can't imagine the data this year was easy to comb through at all. Before we even jump into that, I want to just start with the why. Why did you guys first decide to release the developer report, and what are you trying to show with these numbers?
Yeah. I think there's two reasons. One is just that I at Electric, I think we're fairly differentiated in that everyone on the investment team has an engineering background. A lot of them have started companies. And so there is just kind of this natural affinity to builders and trying to understand where these builders come from. But separate from that, I think, crypto is an industry that's where a lot of attention is given to price. And price movements. And so, for us, understanding developers is really a way of understanding fundamental growth in the ecosystem and fundamental growth separate from how the markets are doing. Because if you think about it, you need developers to build things for there to be users, for there to be usage, for there to be transactions. And so everything kind of flows from the developers who are building applications, the developers who are working on core protocols, the developers who are, securing networks. And so, at its core, we think that's one of the most important signals that you can look at to understand future value, right, eventually, of the ecosystem.
This is also pretty interesting in crypto because there's such a default to open source. And I do think that's such a big spirit, and even being able to do developer reports like this and be able to audit different code depositories is because a lot of the projects that are building the industry are open source by nature.
I mean, that's exactly right. It's incredible when you think about it, is that we're working in an industry that's a little over $2 trillion in value, and all of the majority of the data is stuff that we can find, right? Whether that's data on chain or that so much of the stuff is open source. Even the ethos from the very beginning for Bitcoin was hey, public mailing list, here's my thoughts on this P2P e-money system called Bitcoin. And by the way, here's the code for it, and just hit publish. And so from the very, very beginning, I think that open source ethos has been strong and continues to be. Although I do think it's important to caveat that there are a lot of developers who have always built in closed source, who are incredibly important and a huge part of this community as well, that the report doesn't get to cover because we just can't look at closed source repositories. But that would include, for example, developers at Coinbase. That would include a lot of game developers, and I think that is also a part of it that unfortunately just can't be surfaced because it's not open data.
Yeah. Do you have a sense for how big it's undercounting? Do we have any way to ballpark that?
Oh man. I think it's really tough. And the reason why it's tough is because it really is dependent on the type of application. So I would say for a DeFi application, actually a lot of that is open source. The underlying protocol is open source, like, a lot of the times the UI is open source, and that's also why you can see similar UI. Like a lot of dexes have similar UIs, and it's easy to, because it is out in the open, and people can utilize that. But then when you take something like an NFT project, right, where actually the only kind of open source code was the smart contract that was published. But there's really a lot of stuff behind that as well, that's not included. Or if you think about gaming, it's that ratio is going to look very different. Where, okay, maybe the in-game economy that's crypto based is open source, but what about the mechanics, right? The graphics and like all of that is going to be closed sourced. And so I think a lot of it is going to depend on the industry as well, which is part of the reason why, for example, in this report, we included DeFi open source developers, and we just didn't include NFTs, NFT developers and gaming developers, because it just would have, the data is incredibly skewed in that way.
Yeah, I flipped through the report, by the way, earlier this morning, and my sense was really interesting, really insightful pieces of data, and gonna love to dig into all this pretty soon with you. But I also felt like it's directionally accurate. It's not necessarily set in stone. It doesn't necessarily tell you anything super concrete about the number of developers, but it's directionally accurate, right? So before we get into the details here, I feel like we should take a step back and actually ask ourselves, what is this thing, right? Because we kind of jumped into it talking about, the so what behind it, but maybe we should actually take a moment and describe what this thing is. So what is the developer work? Can you give us just like the quick overview?
Yeah, sure. So the developer report is something that Electric Capital, which is an early stage crypto focused VC firm, puts together every single year. And we really look at an incredible amount of data in order to get to some of these insights. So this year, for example, we looked at nearly 500,000 code repositories. We looked at 160 million code commits, and we actually fingerprint every single code commit. And part of that is so that we can discover original code commits, that it's not a copy paste, that it's not a fork. And in order to really understand in depth how many developers are working in Bitcoin, how many developers are working in Ethereum, how many developers are working across Web3, what does that growth look like? What does retention look like? How do different ecosystems compare? One of the things we looked at is how do EVM compatible ecosystems compare, this year, and how's that growth looking? And one of the things that Catherine alluded to in the beginning is that this is also a huge community effort, because in order to get the mappings, the taxonomy between the code repositories and which ecosystems they belong to, that is something we really have to rely on for the community to pitch in as well. And so, we've had over 100 contributors at this point, just contributing repositories to map out the crypto ecosystem taxonomy. And so that's really incredible to see as well.
What were some of the data points that really surprised you?
One is that this was a year of all-time highs. I think we've felt that kind of energy. And by this year, I guess I mean 2021. I think across 2021, we all felt that energy where a lot of new people were coming in. I'm sure you guys got this a lot, where friends would text you and asking about crypto. You would meet with teams who traditionally worked for Web2 companies, whether super senior or sometimes, straight out of college, looking to get into the space, or feeling like, hey, I worked in the crypto or Web3 thing at my Web2 company, and it just feels like it's not innovating fast enough. So now I'm joining the space. And so I think we saw a lot of that energy, but to put a number against it was really incredible to see that this year, by the end of December, we had over 18,000 monthly active developers working in the space. So these are developers who actually actively contributed code, in the past 28 days. And also that we had over 30,000 developers join. So new developers who had never touched any sort of crypto related code repository before, all of a sudden, more than 30,000 new developers now committed some sort of code to a crypto related repository. That's incredible. And that's the highest we've ever seen in history. And crypto at this point has been around for more than 10 years. So in more than a decade of this industry's history, we've never seen so many such high monthly actives, and we've never seen so many new developers entering the space.
Real quick, can you help me put that into context? Is that a big number? Is it a small number? Like, how should I think about that number, 30,000 developers?
Yeah, that's a great question. I think on one hand, it can be incredibly small, and on the other hand, it can be powerful. If you think about traditional Web 2 companies like an Amazon or a Google, a couple tens of thousands of developers, are frankly making the software that's running the world today, right? That software that everyone almost in the world uses and touches and influences our life in some way. And so in that way, it is incredibly, it's very powerful to see that that's the kind of traction we're getting in Web3. But if you look at open source developers that are, for example, working with JavaScript, that's going to be a super high number. And, we're not really approaching that right now in Web3. Web3 has about 18,000. So in that way, it's, we're really, we have a really powerful contingent. Amazon is at 36,000 developers. But then if you look at the number of developers that are working on JavaScript, that's 16 million.
You don't need a bunch of developers to do really interesting things. So I kind of wonder, how much is one Web3 developer worth in the traditional world? Like, what is that scale there? Do we have a sense for that at all? I know it's some number more than one, right? But it's just a thought in my head, right?
One of the analysis that we did run, and we didn't include it in this report, but we were just curious, how many ecosystems is a single developer working in? Turns out really very rarely do people work in more than two, which is kind of expected. I think it does take an incredible amount of time, but also if you think about the way that Web3 communities work, that once you're in a community, you're really solidly contributing, and these are your friends, these are your people, this is your tribe. To how many developers does it take to to do some of this stuff? Bitcoin is a good example where it's an extremely mature ecosystem, and so you're still seeing more than 100 new developers come in every month, contributing something to Bitcoin. But overall, you're looking at somewhere above 600 monthly active developers, and that's holding up the entire ecosystem. For years now, it's been chugging along with more than 500 monthly active developers. That's really amazing. And I don't think it takes, for something that's a little bit more mature, I don't think it takes that many developers to maintain it and for upkeep.
Wait, that's crazy. Hold on. There's only 500, maybe 600 developers contributing to basically ensuring that Bitcoin is sustainable in its current state.
Well, so the number is 673 monthly, but also keep in mind, again, open source only, right?
Yeah.
So now again, we're discounting every developer who's working in an exchange. Maybe you think about the fact that Bitcoin is the bread and butter of almost all exchanges. That's a huge undercounting too with the closed source developers. But in open source, so we're looking at a little over 600.
We see huge influx of developers when prices go up, but we don't see huge exodus when prices go down. So I wonder what your insights here are and the exact relationship between price and attracting new developers.
One of the really fascinating things is if we look at the number of new developers that come into the space, that tracks very closely with price. Prices go up, number of new developers go up. But then if you look at kind of all up monthly developers, you do get this thing where in 2018, we saw a peak, prices then crashed more than 80%, but developers stayed flat. And I think that is a really, really remarkable thing to see, is that yes, price movement, excitement in the market brings in and it infuses the ecosystem with new people coming in, exploring what's happening, and then they're kind of sticky, right? One of the things that we found though is that stickiness is totally dependent on how often you're contributing, which intuitively I think makes a lot of sense. Where we categorize developers by full-time developers, part-time developers, and one-time developers. Full-time developer means that you contribute 10 or more days in a month. That's basically this is your job now, right? You're more than just working on this on weekends. You're more than just working on this on days off. This is kind of one of the core focuses of your life. And as a full-time developer, that retention looks really good across Web3, where for something like Ethereum, especially after 3 years, your retention is still above 30%, which is incredible. But it also matters at exactly where in the market you came from. If you came at the exact market top, and then it's just all downhill, your retention is actually still not great. And so we kind of see that we did these kind of like triangle charts for retention. And you can see that if you came in like literally right at the 2018 market top, your retention after year one is just going to be a little bit worse compared to everyone else. And so I think that timing also matters.
Another narrative that's been really, really big, I think, in the last like year or two is this idea of like the multi-chain future, right? And this is because like we have explosions of other ecosystems. Justin and I did an episode on like the multi-chain universe, I think a couple episodes back. So just a quick plug for our listeners if they want to refresh. But going back to that, it's really interesting to see like new developers that came in that are not working on Bitcoin or Ethereum, but actually on another layer one ecosystem. So like, we'd love to just like, let's dig into that and like talk about the numbers there.
Now we have some ecosystems that are growing faster than Ethereum at the same point in time. So Polkadot, Solana, Near, Binance Smart Chain, Avalanche, and Terra all fall into that group. And so that's really incredible to see. Although again, to kind of contextualize it, the Ethereum ecosystem is still close to 3 times bigger than the next biggest ecosystem. So there's still quite a gap, but the growth trajectory for some of these layer ones looks pretty incredible. The other thing that was really interesting, speaking of kind of this multi-chain universe, is EVM compatible chains too. One of the things that we've seen is that it actually, we track primary developers, which is developers that are kind of primarily on your chain, and then cross-chain developers, which means that, hey, this project's governance token actually lives on another chain, but it kind of bridges over to this chain. And so when we track these two types of developers, we see that being EVM compatible is actually it's a very, very reasonable bootstrapping mechanism. You see a lot of ecosystems start with a lot of cross-chain developers and then somehow cross over, right? And now they have more primary developers building just within their ecosystem. So that's been really, really interesting to see as well.
There's a lot to unpack here. Just to kind of rehash this, basically Ethereum has 2 to 3 times the amount of developers as the next closest ecosystem. And the next closest are, I think, Solana, Polkadot, Cosmos, and then, a whole collection of others. We think of Ethereum today, or at least, I can't talk for Catherine, but my perspective on the ecosystem of Ethereum is just running away with developers. They have such strong developer support, and it kind of bears out in this EVM compatibility thing, right? All of the EVM developers, that's a great way to bootstrap another network, right? Is, building the EVM. But it does mean that other ecosystems are actually growing fast.
Yeah, there are ecosystems now that are growing faster than Ethereum at that same point in time, which is really incredible to see.
I know, Maria, like aside from, pouring countless hours of work into doing this, you're also an investor. And so I just wanted to ask you, with some of the really fast growing ones, what really is driving the growth? And maybe this is not Near specifically, but what are the common factors that you see people citing either from your seat as an investor or just from talking to people, why they're kind of going to different ecosystems?
I mean, there's 2 answers to that. One is that a lot of layer 1 ecosystems have huge treasuries, right? And they are incentivizing developers to come into their ecosystem as well. And so that's part of it, where developers are coming in because of the grants that they're getting, which is why I think it's really interesting to look at retention, what happens when these developers do join the ecosystems. But I think the other thing that's really important to know is that a lot of these layer ones came out of 2017, 2018, and this is after they had a chance to look at Ethereum and then decide a set of trade-offs that they would want to make compared to what Ethereum has made. And so a lot of these chains have, made trade-offs to have faster transaction times, to have lower transaction fees. And that is translating into a different set of use cases that's possible on some of these other layer ones. It's not really possible on Ethereum layer 1 as it stands today. I think layer 2s adds another layer to the story. And then, obviously Ethereum is also upgrading. But I do think, on some of these other chains, the ability to have to have transactions under a cent, like on Near, holds a lot of interesting implications for use cases that just doesn't make sense on Ethereum. So like, for example, a lot of game developers are developing on Near. And part of that is thinking about, wow, like actually, for Ethereum, I really have to think about batching transactions, right? I really have to think about, okay, how do I do everything in as few transactions as possible because I don't want my users to pay money. But on some of these other layer ones, the trade-off is different. It's actually, if everything can be a transaction, then what kind of possibilities does that open up, and what kind of use cases does that open up? And then in the DeFi space as well, I think that's really interesting, where some of the liquidation mechanisms that Ethereum has, you can actually make the system more efficient in some ways by liquidating people faster because block times are faster. And so there's different kind of trade-offs that different chains have had. And I think we're in the beginning, like the very, very early innings of seeing some new use cases that are enabled by some of these other layer one chains.
I wanted to talk about one particular piece of the data that I feel like garnered a lot of discussion online that I've seen, which is the one around DeFi. DeFi at this point is like really a sector or industry within crypto that holds, like, just locks tremendous value, like $100 billion worth of value that's like locked in it. And reading the report, it basically says that DeFi is really only supported by like 1,000 like full-time developers. And so like obviously a lot of people are asking the question, like, is this an existential risk really to like DeFi?
I would say that, first of all, I think it's an incredible statistic that about 1,000 developers are effectively, building with more than $100 billion in assets in the DeFi space. I think that statistic is really incredible. I think it just points to how early we are, to be completely honest. And then I think we do need more developers in the space.
A couple thoughts that I had was, I feel like a DeFi developer really is worth 1.5 to 2x a Web2 developer. Because, think about, again, the example of Uniswap, it only took a couple developers to build that set of smart contracts. Once they're deployed, you really can't update them. Like, smart contracts are set in stone. There's not too much development to happen on smart contracts. So you have to kind of redevelop new smart contracts if you want to update them. So I kind of feel like DeFi, number one, might just benefit from a better economy of scale. Or not an economy of scale, better efficiency for the developers, right? One developer packs a bigger punch. The other one too, I'm wondering is DeFi also maybe more closed source in some sense, or maybe are they just borrowing code from others so they do more with less or something?
Code borrowing is a huge part of it. Yeah, exactly. There's a lot of forking that happens in DeFi. And so that is one of the things, is that if a code is forked, for those commits, we don't really count them, because we want to only look at original contributors of code. And so that is going to discount a big portion of developers.
What are some of the trends, Maria, that like really makes you super optimistic, or that like you're excited to see more of next year when we read like the 2022 report?
Yeah, I think one thing that was kind of funny from looking at last, how developers and price interacted with each other last time around, is that even though prices peaked in 2018, developers grew for another year afterwards. And I think that's frankly really encouraging. And that, like, okay, even if we're sitting at all-time highs right now, we're actually still, like, if the cycle is like last cycle, then we're going to see developers still, like, a lot of new developers coming in all the way into 2023. And I think that's definitely really exciting. This idea that one of the things I'm really excited about to see is actually things that go beyond developers. Again, we kind of talked about how difficult it is to capture the growth in NFTs and in gaming, because so much of this is closed source. And I also wonder if, for some of these, looking at different other slices of data is a great way of measuring growth. And part of that could be how strong is the community. One of the other reports that we want to publish in this year in 2022 is a community report. I think that is an incredibly important part of crypto, important part of Web3, is measuring community activity and community robustness and health and growth. And so that's one measure that we're going to be looking at again as well. And I think that, in conjunction with developers, really just gives a richer picture for what's happening in the space overall.
Yeah, I mean, I'd love to read that. And in fact, when you're talking right there, I was thinking in my head, hey, this developer report's great, but it's only kind of one slice of the pie. What we're trying to do is capture growth in the ecosystem, and we're using the open source metrics to look at developers, right? But there's also community members, and boy, would a community report be equally as valuable. Another one that I'm thinking too, by the way, and funny because I think Coinbase is uniquely positioned to do this, but we could also have a holders analysis. Monthly active holders. How many people are actually, holding assets in these ecosystems or participating in them in some way, or, even holding an asset, by the way, that kind of is an active user in a sense for crypto, because it means you are aligned with that community. You're watching for its growth. You're part of it. You're a member in that community. And so, if we had those three things, community reports, developer reports, and holder reports together, they'd give us probably a bigger sense of the whole pie and how it's all growing. I also, by the way, wanted to see, I think it'd be really fascinating if we could compare and contrast how developers are pouring into the ecosystem and the reflexivity between price and developers, and also how price and growth of the ecosystem affects holders, and see what the difference is between how developers flow in and out and how holders flow in and out, and kind of understand better exactly how crypto pushes forward.
Yeah, absolutely. I 100% agree. This reminds me of some of the hodl charts, the hodl waves I saw in 2018, but I agree. I think holding it is one way of, I think so much of crypto has to do with like identity, and you kind of identify with the ecosystem that you're in, the tokens that you hold. And so I do think that is a really incredible way of slicing the data. But also just back to the original point of how crazy it is and how incredible and how cool it is that all of this data is out in the open, right? And when else have we ever worked in an industry this large where it's so transparent and we can actually start looking at these numbers? I think that's one thing that I really love working in the crypto space, is just the accessibility of the data.
Probably one of the reasons why developers flock to it. It's open, it's interesting, it's exciting, and there's so many different areas you can dive into.
And it's exciting to build things with the community that's all so excited, like it's fun, like to, I don't know, like to build things when people like appreciate it, and like when everyone's having fun. I don't know. I think that's like really like a not talked enough in like aspect of building in crypto, which is that like the community that you choose is like the one that you just simply maybe like sometimes like the most, and like that's such like a human joy part of it that I think is so powerful. So yeah. So if people wanted to actually read the report for themselves, Maria, where can they find it?
Yeah. So if you go to electriccapital.com, you'll be able to see the report there. You can follow us at Electric Capital on Twitter. All of these places will have the developer report. The last thing I would shout out is this really is both like such a team effort, but also such a community effort. And so if you see repositories that might be missing, please do contribute to our open ecosystem taxonomy. You can kind of see that. You'll be, if you go to the report, you'll be able to see where you can contribute. You can do a pull request. You can email us also at info@electriccapital.com. I will see all those messages and I will reply. And if anyone has ideas for types of metrics that might be interesting to look at, very open to that as well. So open discussion, really, really open to feedback. If anyone has any thoughts, please do feel free to email us. And that's info@electriccapital.com.
That's the ethos of crypto. Open, collaborative. Yeah. We do things together and in the open. Love it.
Well, thank you so much, Maria, for taking the time to like talk to us about the report and why we're excited about the developer like activity in crypto and the future of it, really.
Thank you so much for having me. It was so much fun to have this discussion.
Yeah, I mean, honestly, Catherine, I wish we had more time to specifically dive into what the other ecosystems are doing. I mean, we touched on it, right? Like, Ethereum is leading, but these others are gaining / also performing very well. There's probably so much to look into as far as what the other communities are doing, what the other developers are doing. Just didn't have time.
Yeah. Well, I mean, what I said this during our conversation, but it is like quite nice every year to actually look at these developer reports, because again, so much of it is substantiating like the narratives that like we think of, right? Based on what we see or based on headlines, and like actually looking at the numbers behind it. Cause like, look, it's true. Like with no one building on any of these layer ones, like there's nothing to use. Like we talk all day on this podcast about like the applications and like what it enables. But like at the end of the day, like you need developers to actually build things and want to build things. And the community piece is also so real. Like I know our last episode was like all about the community, and it's like, it really has like such a symbiotic relationship with each other.
I'm going to throw out a weird analogy. Maybe not weird because it's cliche, but it makes sense. Bear with me. So I think that we're in like 1995, 1996 of the internet again. But the sense, I know, cliche, whatever. But again, the sense is like, look, I mean, we have all this data. It's open source. We can look at the developers. We can also look at the community members. We can look at maybe the holders to some degree. But it's hard to pull those numbers out. What we're waiting for is we're waiting for the Google. They could take all the data that's out there and index it, make it accessible, make it easy to look at. And then I think all the insights are going to flow, but we're not there yet. It's going to take another couple of years.
Yeah, but in the meantime, like it is pretty incredible, to Maria's point, that like we're in an industry where you really can like start auditing and like looking at activity this early on. And like I think, every time there's like there's all these like data analytic dashboards that's popped up, like and like a lot of it is like so like community driven. Like one of the big dashboards out there is Dune, and Dune is literally made up of people, like they're users that like contribute data and like analyze them. And I just really love that like spirit.
Yeah, it's certainly out there. People are piecing these things together. We haven't found anything that's comprehensive and like really, I guess, mature and sophisticated. But this developer report is probably the absolute best effort I've seen in the space to bring insight and like shine a flashlight on some of the open source data that does exist. Well, thanks again for tuning in to another episode of the Around the Block podcast by Coinbase. Hey, did we ask all the right questions? We'd actually love to hear from you guys. What would you like to see from the developer report? What questions do you want us to ask? Did you learn something from this? Reach out to us. Leave a comment. Hit us up on Twitter. Hit us up on YouTube. And we look forward to engaging with you.
And don't forget to check out coinbase.com/aroundtheblock, where we have long form research related to our topics and also have any latest about the podcast. And as always, we'll see you guys next week.
Today's conversation is for informational purposes only and does not constitute legal or investment advice. Actual results may vary materially from any forward-looking statements made and are subject to risks and uncertainties.